But there are still a lot of problems, certainly coming from the financial sector. But the point is really this, that even the recovery in the US is not particularly good news for the rest of the world, because the US is becoming less and less important as a source of global demand. It's actually reducing its trade deficit, and particularly its manufacturing trade deficit. It still has a large deficit with China, but with every other country it's reducing, and in fact in some countries, India for example, it's a trade surplus. And it's actually less and less likely to play a very dynamic role in the future, let's say in the medium term, for the global economy. That really means for the rest of us. So you see, it's not just the developed countries which have recovered, but nowhere near where they were, let's say, even in 2010. But it's the developing countries which are, in fact, at now rates of growth which are significantly lower than they have been in the previous decade. This is only giving you 2010 to start with, but actually the whole of the previous decade was much, much higher than this. Okay, now what's going on in the developed countries? Well, it's true, it's true that the developed countries managed to avoid the big crisis. They stepped back from the brink that was evident in 2008 and 2009. But they haven't really come out of the mess. In fact, many people would say that it's not that we came out of that crisis and now we have to avoid another one. Many people would say, well, listen, that was Act 1. We've had an intermission. Act 2 is waiting to start. And Act 2 is waiting to start because the crucial features that led to that first crisis haven't really been dealt with. People blame financial markets, and sure, financial markets were a big part of the problem. Financial markets enabled a kind of global imbalance between surplus and deficit countries. But the underlying problem, if I have to put it very simply, it was this. It was that across the world, we've had a growth pattern that was based on inequality, in the sense that it was a growth pattern that was associated with much higher shares of profit in the national income and lower shares of wages. Now, typically, since those who have profit don't consume as much as those who have wages, that means that demand isn't sufficient.